So let's spend about a few minutes to talk about clean energy. Do you think the climate change conversation is something that OPEC oil chiefs should, oil ministers should start thinking very seriously about? Or is it something that they say, oh, don't worry about those guys in France. We just go, Paris, we just go ahead and do our own meeting in Vienna in Austria, and it doesn't really matter?
Well, the thing with OPEC is what we've noticed about the cartel's body is basically they are more of a thinking of the long-term market share than the short-term impact of the higher prices. So now, if you're looking at renewable energy is a threat to them in the long term. I mean, currently, right now, it's about 5% of power supply in the world. But if we go down to 2035, most analysts are projecting that it's going to go up to about 12%, which is still in market share from OPEC. And OPEC is all about market share. That's what drove their decision last year in November. They decided to maintain quota to make sure that they have their market share. So renewable energy is definitely a threat to them, and it's something they would probably have to discuss in this meeting as well. So looking at what is going on in France, they will probably either decide to maintain the quota, or they'll have to increase it marginally to say 31 million barrels per day, because of Indonesia is coming in on the 13th of this month, and they've been projected to have about 850,000 barrels a day as production for the year 2015. So OPEC is definitely looking into renewable energy. It's a threat to them, and it's something they would have to.
And part of the conversation in the last couple of hours since yesterday was the new coalition for tax on dirty energy, and I'm sure most of the members in OPEC and energy companies will get hit with that new movement to say, look, you're going to pay more tax. One of the delegates there says, look, this is not a punitive tax, but it's a tax that would drive new investments in renewables.
Yes, what we've seen is that there's actually been an increase in investment in renewables. I mean, out of the $5 trillion that was budgeted for 2015 for investment in power, about 60% is going into renewables. And if you're having tax on OPEC on oil production or for dirty energy, and you're having lower prices, that's not a good thing for OPEC countries. Of course, they'll be beaten, or they'll feel the hit of that tax imposition. And I'm not surprised that they're against it, because it's almost deliberately trying to push them out of the market. So for the dirty energy, I think what they should start thinking of now is probably maybe, diversifying into investments in renewable energy. If they still want to maintain that market share they're speaking of, diversify into investments in renewable energy, because whether you like it or not, it's going to happen.
Well, are you surprised that the front runners in clean energy are the technology companies? Microsoft, Google, and the rest of them. Is that a surprise that these are not traditional energy companies like Shell, Chevron, ENI, Total, Elf, and the BP?
Well, I guess the reason why you would say they are the ones is because they probably realized the opportunities before this other. I mean, for them, the traditional fossil fuel firms, or in the industry, so to speak, they probably thought, oil is like 82% of power supply is coming from oil. So that's what we're going to focus our mind on, and try and invest in that sector. But Microsoft, Facebook, and they've seen ahead of.
They've seen the future.
They've seen the future. So that would make sense why they would invest more in renewable energy compared to those others traditional fossil fuel.
Perhaps in the future, that is not really far from now. The energy firms will no longer be BP, Shell, Chevron, Mobil, Total. Perhaps they will be Facebook.
That's possible. That's very possible.
Perhaps the new world of energy.
I mean, technology is taking over everything.
Will no longer be Shell or BP. So we'll just be looking at Facebook or Google, not just as a technology company, but also some of the energy solution providers in the world. That will be something really, it's a brand new world.
It's a brand new world.
Yeah.
It is.
Perhaps some years down the line, we're going to have a revolution. And perhaps that revolution is about starting as we speak. Okay, so it's been a bad year for prices and inventories. Give us your brief comment on what you think the rest of 2015 will look like.
For 2015, I don't expect any huge recovery in oil prices. I mean, it's pretty much the end of the year. It's 1st of December. So I really don't see anything that would happen to make oil prices go up significantly to what it was last year. It's probably going to maintain it's probably going to remain below $50 a barrel for the rest of the year. And if you look at what's happening with OPEC countries as well, there's this price war going on even within member countries. When you have countries like Saudi Arabia and Kuwait actually paying for your shipping, for your energy to your location, as well as paying for insurance and delivery. You can imagine that. So that's
amazing.
Years
past, they just wash your hands. You want to take it, take it. You don't want to take, you don't want to take it, just leave it. Take it or leave it. Now
so it's becoming a buyer's market as opposed to the
seller's market.
I mean, the oligopoly model will tell you that you have few sellers and you have many buyers. So the sellers have more power. But what we're seeing in the energy market right now is like the buyers have the power because everybody is trying to sell off their crude products to be able to make money to support, to support government activities or support investments within the country. So what we're having right now is it's a buyer's market.
And the sellers are even offering that at discounts.
Yes, they are offering crude products as well.
Amazing, Saudi Arabia selling oil at discount. It's never unheard of in history.
Nope, never been heard of.
Amazing. So let's get back to the U.S., the world's #1 economy. Do you think the shale business, this is most likely the end of it, or they're just cooling off a little bit, and perhaps they will find a sometime later to come back very strongly into the market?
Well, the thing with the energy market is what we have is all prices it goes up, it comes back down. So now it's down, and obviously everybody's feeling the heat. And probably U.S. shale producers too are feeling, they're definitely feeling the heat, and they're coming down. And if they come down, prices go back up, which means now they have the money to support further investment. So which means shale producers are probably going to come back in again. So it's like a cycle of up, down, up, down. So for me, looking into the future, I don't see the U.S. shale producers completely getting off the market. It depends on at what stage the price is. If the price is low, they're going to cool off. If it's coming back up, then they're going to come back into the market. That's what I see. Okay,
we'll conclude the conversation with China. The PMI came out today, manufacturing data. That's very terribly negative. 3-year low for the manufacturing data for China, and that is rattling the market as we speak. So if U.S. is on the uptake, we're eyeing the jobs data this week, and the PMI has been okay, the GDP has been okay, but China, second position seems to be weakening and weakening. That is not good news for the commodities market.
No, it's definitely not, because we know China is a major importer of most of these commodities, the second largest consumer of oil in the world, and if you're having a slowdown in that economy, it means that's definitely going to impact our market as well. So, I mean, for China, it's already been, it's becoming a broken record. They've said it all through the year that Chinese economy is slowing down. So, I mean, it's not much of a surprise with the PMI, because that's what we expected anyways. It's a slowdown in the Chinese economy. But definitely, this is still going to impact the commodities market.
Heartbroken, a broken record, and a broken year, a year in which all prices were broken.
Yes.
Nice one. Thank you very much for coming. We appreciate that. Welcome to December.